Bitcoin's MACD threatens to crash the whole market. Hey guys, what's going on? Jebb here, and in today's video, we're going to be talking about one of the most important technical indicators in all of Bitcoin, and that is the MACD. You see, I've been doing technical analysis on Bitcoin's chart for nearly 6 years now, and every single one of those years, the MACD on the weekly chart has been exceptionally important. But a potential bearish MACD cross is not the only major bearish warning that we're looking at right now on the Bitcoin chart. In today's video, we're going to be talking about the bullish view of Bitcoin, the bearish view of Bitcoin, and then finally, I'm going to give you my view of where Bitcoin is heading next. So without much further ado, guys, let's go ahead and dive right on into it. Bitcoin has been wildly bullish this year, rallying over 65% year to date and almost 90% in grand total. No one has any doubt that Bitcoin has been exceptionally bullish. And there is a major bullish view of the Bitcoin market over the next 12 to 16 months that goes a little something like this. Bitcoin has a 4-year halving cycle. We are approaching that halving in a little under a year. This is traditionally the year that Bitcoin goes into a major bull market. And because of the massive rally that we've witnessed so far this year, that rally is likely to continue on to a $35,000 to $50,000 Bitcoin by the end of this year, moving on into all-time high towards 2024 and 2025. I personally subscribe to this view. I want to get this out there first and foremost. I am a bull on Bitcoin, and I do believe the next year is going to be very bullish. And in this first part of the video, I want to show you exactly why I am in that camp. Bitcoin's rally so far has been substantiated by plenty of technical and fundamental factors. First, the technical. To name a few, every single bull market in the history of Bitcoin has been preceded by a bullish MACD cross, as you can see on our chart. And every single bull market that has ever happened in the history of Bitcoin has also been predicted by Lux Algo. And also, when you look at other trends, such as the realignment of the major moving averages on the 3-daily chart, and the fact that Bitcoin is breaching through the transitionary zone that we've spoken about so much, that sits between $25,236 and $28,545, and for many other reasons, it's very apparent to me that Bitcoin is now entering into a bull market. There's just a few of the technical reasons for that, but there are plenty more. In fact, if I were to sit here and list every one of them, there would probably be over 40. In my experience analyzing and watching both of the last two bull markets, I can tell you with a lot of confidence from the technical standpoint that Bitcoin is entering into a bull market soon from a technical perspective. Now, for the fundamental reasons why I believe Bitcoin's entering into a bull market. First and foremost, the halving event is less than a year away. If you'd like, there's a video that you can watch right there where I talk about why a clock is going to send Bitcoin to $50,000 within the next 12 months. Funnily enough, that video got about 50,000 views. The Bitcoin halving currently only sits 300 and change days away. And when that halving does finally occur, historically, that will be right in the middle of the beginning of a new Bitcoin bull market. As you can see, every time that Bitcoin has gone through a halving event, it has entered into a bull market. So the Bitcoin halving event coming up is one of the major reasons that many people, including myself, believe that a major bull market is starting over the next 1 to 2 years. Two more major bullish fundamental factors to consider are the fact that the CPI is coming down, and we've seen inflation drop from 9.1% down to about 5.5%. That trend is likely to slow, but continue down towards target 2 to 3% over the next couple of years. Likewise, the effective federal funds rate has currently risen all the way to 5.15%. It will probably go to 5.4% on the June 14th meeting, but after that, we will more than likely see a Fed rate pause, and within the next 6 to 12 months, historically speaking, it's likely that we would see the rates dropping. You can see from this chart that the effective federal funds rate plateau rarely lasts more than 2 years. When those rates start coming down, likely within the next 1 to 2 years, that will be a huge bullish incentive for the entire economy, especially the stock market, which being correlated to Bitcoin will drive a Bitcoin rally right around the time of the halving. The bullish view of Bitcoin has to do with many different technical factors and the halving event, but the bears and the contrarians have some very good points as well. One of those bearish points that we absolutely must consider is that the halving event gets half as large every single year. You see, every halving event is proportional percentage-wise, but is half as large as the previous in an absolute fashion. Originally, every 10 minutes, 50 Bitcoin would be minted when a block was mined. After that, in 2012, that dropped down to 25. In 2016, it dropped down to 12.5. In 2020, it dropped down to 6.25. And this halving coming up in April of 2024 will drop the block reward down to 3.125. It's a 50% drop, but proportionally, a 3.125 drop in the amount of Bitcoin being mined is much less significant than 25 Bitcoin being mined being lost. The bears make a very strong and true argument that the Bitcoin halving is half as important every single time it occurs than it was the last time. this is likely to be the last halving that actually has any real noticeable impact on the supply and demand economics of Bitcoin. You see, Bitcoin's current circulating supply is already sitting at 13.4 million out of 21 million that will ever be created. That means that over 92.3% of Bitcoin that will ever be mined have already been mined. Inflation, and in this case, the disinflation of Bitcoin, is driven by the supply increase. And that supply increase being cut in half by every halving event is becoming less and less relevant every 4 years. For that reason, many bears make a very valid argument that Bitcoin is no longer going to be so coupled towards the halving event in the same way that it has been, as you've seen on this chart, over the last 12 years. On top of that, some of the other fundamental factors that the bears bring up are equally valid. The other major point that many Bitcoin bears make is that the 2020s decade is shaping up to be a dark decade compared to what we saw in the 2000s and in the 2010s. In the 2000s and the 2010s, the market was driven by massive growth as the entire Russian space came online geopolitically. And with the introduction of the Russian space and the rise of China, well over 2 billion workers came fully online to the global economy, and all of the resources of those nations came abundantly accessible to global markets as well. That, combined with stunning GDP growth the world over, especially in the United States and in Europe, led to some of the most prosperous times that human civilization has ever witnessed in the first 20 years of the century. However, much of that growth was driven by very low interest rates and demographics that allowed for major growth that are now shifting. The world is getting older, and it's getting more difficult for you to find enough labor to drive your economy as we see more workers aging out of the workforce into retirement. This population shift is leading to major upheavals in modern economies, and it's making things much more difficult at home. For that reason, and many others relating to the banking sector and the residential and commercial real estate sectors, this decade is shaping up to be much more difficult than the 2010s were, when Bitcoin grew for the first time. With a backdrop of slower growth in the stock market and slower growth in gross domestic product in the first world, that's likely going to make it much more difficult for investors to find the capital to invest in Bitcoin. This decade is going to be harder than last. But it's not just for fundamental reasons that the bears believe that this rally that we've witnessed over the first half of this year is in danger. It's also technical. As we mentioned in the introduction, the MACD on the weekly chart, one of the things that we use to confirm a new bull market, is now threatening to cross bearish. Looking at the last 4 major times that we've seen a bearish MACD cross on the weekly chart for Bitcoin, we have to go back 5 years. You can see very clearly that bearish MACD crosses typically lead to very large corrections in the market. So why would this time be any different? The bears also argue that Bitcoin's fallen below its 14 interval moving average on its weekly chart RSI, something that normally happens around the same time of a bearish MACD cross, and also has preceded all of these major drops over the last half decade. Furthermore, while a buy signal from LuxAlgo came in, giving us the confidence to call this a new major rally, Bitcoin is struggling right now. It's already hit into the take profit zone of this buy signal, and we're actually threatening to drop below the trend catcher on the weekly chart, which could lead to a sell signal from LuxAlgo. All of these factors and more are some of the reasons why the bears, I think, actually have a very credible argument to say that not only this decade is going to be difficult, but the rally that we're currently in is in danger. So with two very valid perspectives, what's my view? To boil that question down to a nutshell, I actually agree with both. And hear me out, this isn't a cop-out. The thing I want to share with you guys is that I don't think these two views actually have to contradict all that much. That's a lie that's been fed to you by people on both sides of the aisle. There are plenty of bullish analysts out there and bearish analysts out there that want to argue that their view is the only one that's right. All of the data that I just shared with you is all valid, and it's all accurate, and it all has predictive power, and it's all relevant. Let me just give you an example from back in the early days of the YouTube channel in 2018. There were times where I would make a video where I was saying, look, the next 3 months are going to be very bullish, or the next 3 months are going to be very bearish. And then a couple of days later, I make a video saying the exact opposite thing, but on a different time frame. What do I mean by that? Well, for example, I may make a video where I say Bitcoin's going to go up tomorrow, but in 3 months, it's going to go down. I would get so many hate comments from people that are saying, Jebb, make up your mind. Is it going to go up or down? Think about it like this. Can the Bitcoin market go up today and then 3 months later go down? Yes. Those two views don't actually have to contradict each other. Can the market do this? Go up in the short term and then down later? Absolutely. Bitcoin can't go up and down at the same time, but Bitcoin certainly can go up and then down. And so right now, I think the analysis of Bitcoin is actually in a similar boat to where I was back then, where people were giving me hate for that. I do believe that this is going to be a very difficult decade for Bitcoin. And I do believe that we are going to see a lot of challenges that Bitcoin has never faced before, with a different rate market, a different inflationary market, a different debt market, and a different job market. Geopolitics are in some of the most unstable positions that they've been in since the last nuclear scares of the 80s. 80s. And that does not lead to a fertile plain for new technological innovations like Bitcoin to grow and flourish. Bitcoin needs stability and it needs easy investment, and it's going to find it difficult to acquire both of those over the next 8 years. But Bitcoin does have plenty of bullish technicals and plenty of bullish fundamentals that are also relevant. It's not a good idea for us to only look at one view and then not look at the other and close our eyes and say, la, 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 I don't want to hear it. Are the bears right? In many cases, yes. Are the bulls right? In many cases, yes. Why? Because they're talking about two different time frames. If you'll notice, many of the bearish arguments we pointed out are referring to the next 6 months and the next decade at large. Many of the bullish points are pointing towards the next 2.5 years in general. These two theories have some overlap, but actually they don't have much. And so that's why, in my view, I actually think that we should consider both of these theories to be pretty accurate. Is Bitcoin in danger of having a correction relatively soon as a result of that MACD cross bearish? Yes, we could see a drop on Bitcoin all the way down to the CME gap sitting between $20,000 and $21,000. And we could drop even lower. As I spoke about in the last video that went up on this channel, make sure to go watch it. There are plenty of dark clouds hanging over Bitcoin here in the first 2 weeks of June alone. A continued correction on Bitcoin is not something that should be avoided or discouraging. It should be something that we can see as a buying opportunity so that in the next 1, 2 to 3 years, as we go into the next bull market, we are able to have Bitcoin that we can then profit by when the market does go through that rally. So in short, in my view, the bullish argument and the bearish argument do not have to contradict. I think they both have a lot of valid points. 1, this is going to be a difficult decade. 2, this is going to be a difficult next 2 to 3 months for various relevant factors in the news right now. And 3, I think the bulls are right that the next 1 to 2 years are going to bring about a major bull market that will send Bitcoin back to all-time high and beyond. In conclusion, there are various factors that lead us to the concern that a big drop on Bitcoin could be coming in the next month, during the month of June, potentially as low as $20,000. That being said, even if there is a major correction, then that major correction will serve as nothing more than a buying opportunity for anyone who truly believes in Bitcoin, because a major bull market is still likely to come over the next 1 to 2 years, moving into halving season. If you are an investor in the Bitcoin and cryptocurrency space, I highly encourage you guys to continue in your basic disciplines of dollar cost averaging, watching the markets every single day, and continuing your journey towards financial sovereignty by reducing unnecessary expenditure and rebalancing your personal finances so that you have money on the sideline to invest when we do see major drops happening. I also highly encourage you not to tunnel vision just on cryptocurrency, but remember that on your journey towards financial sovereignty, you're going to also need to work on your personal finances. So get a side hustle if you want to make some more money. Find ways to cut expenditure that you don't need, and make sure that your personal finances are in a place where they are well positioned to be able to save money and put money aside to invest in the Bitcoin and cryptocurrency markets so you can make the most of drops that may be coming over the next couple of weeks to months. Therefore, you may be able to profit over the next year and 2. And also, make sure to hit that like button and subscribe to the channel for more cryptocurrency updates so that you can see what's going on in the climate of crypto. Sign up for Lux Algo because it has called every single bull market that has ever happened perfectly, and it can help to call this one as well. Join Club DeFi and get access to Club DeFi's private Discord server, where I'll join you guys in a group setting over in office hours every Monday at 8:30 p.m., and I get to answer all of your pressing questions and get to know you guys better. This MACD cross is concerning, and it may lead to a major drop on Bitcoin. But if you understand and are applying the principles of technical analysis and the principles of financial sovereignty, then you will be in a position to use that drop, if it comes, as an opportunity to grow your holding in Bitcoin and set yourself up for gains when that bull market comes over the next 1 to 2 years. Thank you guys so very much for watching, and make sure to like the video and subscribe for more content. Before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.